And I'm the author of the book Trend is Friend. The date today is 6th of December 2022. It's a Tuesday and the time is 12:11 p.m. just right after the noon time. I wonder if you had your lunch, but welcome to Purchase Rationale. Purchase Rationale provides 15 reasons when considering a particular stock. All right, a disclaimer here though, whatever I share are just purely for information, knowledge, and education. All right, should you decide to buy after my sharing, please first consult a financial planner or a licensed broker. I have an interesting stock for you today because there is not many days that I can see a stock that is selling at a big discount. The stock in question today is OCK Group Berhad. The stock code is 0172. It's actually a telecommunication stock. And with the new government trying to amend the 5G network, so it has come into focus and attention. And since it is so highly discounted, I assume there will be much interest in it going forward. Okay. Uh, the criteria for selecting OCK Group Berhad as the best stock pick today is based on, of course, price gain. Amongst all the stock pick, OCK has gained the most today. Uh, there is definitely a trend confirmation, good momentum that is above the Ichimoku cloud and the MA 200. It has relative volume break, just also breaking the one greater than one, and is a profitable net cash company. Okay, let's look at the fundamental for a start. Okay, as usual, we will calculate the intrinsic value. This is where it gets more interesting. All right, to calculate intrinsic value, we use enterprise value divided by the total common shares outstanding. In this case, the enterprise value is 1.2 billion. Okay, 120 billion divided by total common share outstanding of 105 billion, and we have intrinsic value of 1 ringgit and 14 cent, and the current OCK market price is 45 cents. So we are having a hefty discount. And how much is that in terms of cent? 114, 1 ringgit 14 minus 0.45, 45 cent, 0.45. We have a 69 cent discount. And in terms of percentage, 69 cent divided by 0.45, you have 154% discount. How good is that? Anyway, in any case, just letting you a secret, I have already bought 10 lots before I start sharing this. Your choice. You decide. Now let's go on with the fundamental. Okay. Uh, OCK with its operating margin of about 14% is more than able to cover Of course, it's already more than able because it is selling at a discount and has an operating earning yield of 5.24%. Okay, what I mean is the current operating margin covers the price more than 5.24%. ROIC of 2.8. Not so exciting, but then this is a recovery stock. Okay, recovery company. PE ratio 15.57, quite high. Well, understandable because it has been a money losing company. Only recently, the attention has been given due to the 5G network upgrade for the new Malaysian government, and the new government is now negotiating the package again. Price earning ratio forward is 20, so it looks like those who forecast will be having a ascending PER, so it is expected that the price will continue to rise. Very exciting enterprise value to EBITDA, or what I call the acquirers multiple of 6.72. Anything below 10, I consider good, and 6.7 is excellent. It has a dividend yield of 1.09%, and a dividend payout ratio of about 19.3%. Okay, the free cash flow on a trailing 12 months basis is negative. Is understandable. This is purely basically company that has been losing money over the years, but I firmly believe that it is fine. It is getting its cash flow from financing because it still has a free cash flow margin of 7.47%. All right, and quite a large net debt of 504 million. All right, heavy debt because this is a very capital expenditure capex, very capex heavy kind of company. Telecommunication towers and hardwares. All right, has a bad debt of 1 million, and F score of 5, not so exciting, but then again, I expected it to grow over time. So now I'll be a bit forgiving on it. Augment of Z score, uh, it's a little bit frightening here, 1.9 against 2.5. Of course, for a losing company coming up, it's only reflective of because of the debt it is also holding, right? Big debt, definitely more risky, and a by niche score of minus 2.88, which is okay, meaning they did not manipulate the account. Okay. I will consider this OCK as a company in recovery. Okay, the recent let's take a look at the earnings. Okay, the recent earnings quarter wise has actually been coming up. All right, and no, let's take at the overview. The overview doesn't show statement. Okay, statement on an annual basis. 2015, 400. Yeah, it's incremental. And the trailing 12 month, most recent 12 month is 567 million. All right. And the pre tax income has been also incremental but the previous 2 year, 2020 and 2021, is not so good. After tax, the net income on the trailing 12 month is compared to the previous years is the first time hitting 30 million, 30.5 million. So it's a company on the way up. Okay. How about the sentiment of the market? For sentiment, we will have to look at the chart. Okay. Look, OCK is number one here. Okay. The price have increased since this morning at 2.3%. Okay. So trend wise, of course, the first thing I notice is that there is a golden cross already happening here. And trend wise, there is two higher lows here. Okay. And momentum, it is above the cloud and also above the MA 155 line, and is now MA 55 is supporting the price candlestick. And if you notice, it is just a recent breakout today. All right. The price action has just recently breakout. So our entry strategy is actually using the uh, squeeze breakout entry strategy. All right. And it's also firmly supported by the MA 155 line. You see, all the candlesticks will bounce back at the MA 155 line. Okay. Now, should we buy? Which of course I did buy the stock at 45 cent with a target price at Apex Elio Wave 3 at 52 cent. Okay, 52 cent with a cut loss of 43 cent. It will yield a reward to risk ratio of 3.65 times. Okay, isn't that good? I'm happy with 2, but it's giving me 3.65. All right, and it is in the Elio wave 3 wave. So the second wave, second long impulse wave. And I'm happy also to note that the volume buildup has been quite consistent over the last few months, and it is in a state of what I call bias intact, where the price action actually juxtapose itself with the volume. So there is a relative volume breakout against also relative breakout against the price. Volume breakout with juxtapose with the price, indicating that momentum build out is incremental and is expected to push the price up. All right, and that's all I will share with you today. If you think that what I share with you is informative and educational, please like, share, and subscribe, as this will help the channel to grow. Thank you for listening and your time. I hope you make some money out of this particular stock, which is quite still cheap to buy with a 100% discount. So have a good day and happy trading.